You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome to Volatility Views. That was quite the opening. It was exciting to get to listen to that phenomenal opening. And if you're wondering, hey, where's that ridiculously deep voice that normally leads in Vol Views? And why is Mark Sebastian talking? And the answer is Mark Longo is tied up on personal matters. And so the hosting duties, thankfully for you, have been left to your wonderfulness, Mark Sebastian. This is Vol Views. It is your place for volatility. We're going to talk all things volatility. And joining me from the Chicago Board Options Exchange in beautiful downtown Chicago on the corner of LaSalle and Van Buren is Russell Rhodes, the alliterated VIX master. How are things, Russell?
Well, hello, Mark. I'm going to do my best Mark Longo impersonation. How are you doing today as well? It's time for everything volatility on Volatility Views. Everything's going well here. There's been some action down in the VIX pit this week.
Yeah.
I'm looking out on the courtyard near the horse right now, and not everybody has to wear a sweater, so I guess it's almost June. And the Cubs finally lost a series up in Milwaukee, which makes about half of this city very happy, because, God, we're getting sick of listening to that.
Well, I don't know if you know this, but you can get us on AHA Mobile, on all these great ways to, of course, the Options Insider Radio app. But let's talk about what's going on in the VIX pit. Let's go through our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
And welcome to Volatility Review. Let's talk about what's going on. Well, I would sum things up in this way, is that we had a lot of volatility to have absolutely no volatility. Right now, as we're recording this on Friday the 20th. We have the VIX index at 15.52 down 81 cents. The Russell Vol, the RVX is trading 19 even. The VXN, the NASDAQ Vol Index, 1672. And some of the other indexes, the VXV 18.18 and VXST 13.62. So lots of movement, but maybe not that much movement. As I look now, we've got the front month future expiring next Wednesday, trading at a nice premium to the cash at around, call it 16.5, and the June future trading 1760. The July future close to just above 19. So Russell, some nice contango, some nice action. I think the fascinating thing is if you look at a chart, like a daily tick chart for the week of the VIX Cash Index, is that we opened the week at around 1560, and here we are 1551. And meanwhile, the SPX is, I want to say, a whopping 8 points higher than where we started the week as well. So the range, though, I think is a different story. You want to maybe talk a little bit about the range?
Well, I do well, first off, this week was May expiration. So the May quote you gave was the May 25th weekly. June is now our front month. Which it sure doesn't feel like June should be our front month. When I do my weekend reviews and we have a week like we've experienced, assuming that nothing dramatic happens in the next 2-3 hours, I'll try to show what's happened during the week to indicate that there was a little bit more volatility than the week-over-week changes indicate. And I think this is going to be one of those weekends. Because like you mentioned, the SPX, about 8 points. There's about 8 points of difference. I think, what'd you say, there's about a dime of difference with VIX versus where we are right now versus last Friday. And, sometimes the week-over-week numbers do not do justice. The S&P 500's had how many days this week did we move by double digits, assuming today's one of the double-digit moves?
I mean, we've had a lot. I'm trying to think. Was there one day where we didn't? I want to say the Fed day where we were flat on the day, even though we had a 30-point range. What I told people, and I was saying this online today, is that we've had huge intraday volatility and almost no volatility from week to week. If you looked at where things were one Friday and then looked the following Friday, you would have thought nothing happened. Meanwhile, on a daily basis, just massive amount of movement.
Yeah. Yeah, it's that's one of getting a little bit more technical here. That's one of those arguments that we hear sometimes when you show that VIX understates the realized volatility. Well, one of the reasons VIX will understate realized volatility is because of the type of intraday volatility that we get. And this week is most definitely one of those weeks that at no point has VIX really been a good indicator of what's been happening from the open to the close each day.
No, it's been a terrible indicator, if any.
Well, don't ever call VIX terrible anything.
I mean, it's a love. Listen, I love.
Are two different things.
I love VIX, but what I would say is actually Garch has been a terrible indicator of things.
There you go. So.
Rather than VIX itself. If you look at really what's going around, there has been massive movement on an intraday basis and a daily basis, and you've seen kind of daily ranges be even crazier. One of the things that's a kind of a fun exercise to do, Russell, is to look at average true range and then convert that back into a volatility, using that as kind of a standard. So take that average true range, make that the standard deviation, if you will, and then convert that back into a volatility. And you'll find that you sometimes get a much closer, that comes there. When you convert that back into volatility, the risk premium in VIX relative to market premium is not nearly as high as is regularly reported.
No,
And that's one of the things. So speaking of VIX, let's maybe talk about some of the big flow that we saw today. And Russell, I got to give these guys credit. I am sitting here trading, watching. Yesterday, we're obviously, as I said, we're recording this Friday. Yesterday, Friday morning, the S&Ps are down at the low of the day. At the low of the day, down about 20 points. The VIX is over 17. 17 running at 17 and a half, maybe threatening 18. VIX futures are over the June future is well over 19, and a trader comes in and buys 120 and sells 2 of the 42 calls as a trade. And then we also saw the 2040 start to trade. We saw all of these 1x2 start to quote. And some of them traded. They paid $1.33 5x10 on the 2042 and a half 1x2 call spread. Lo and behold, that was the absolute bottom of the market. And these 1x2 guys that go out and sell that curvature, they are guys to watch. They're not stupid, the guys doing that trade. And they caught the bottom by within 50 basis points in the S&P 500. It's crazy.
Yeah, well, nobody ever said that VIX volatility traders are not smart. They're
no.
I always when I got to bring a group around the exchange this week from my soon to be alma mater, Oklahoma State University, and I told them that the SPX traders are smart, but the VIX traders are rocket scientists. And I'm not talking about you and me. I'm talking about the people that they're in the pit. So
yeah.
It's and there's a reason for that, and that's also why you probably want to pay a little bit of attention to what they're up to, because they're often a good indication of Vic. When I finally finish up what is going to be my second VIX book, there's going to be a whole section on using VIX as an indicator, and it does an excellent job of being an indicator.
It absolutely does, and and I think the VIX futures and that curvature are another great indicator that hey, stuff is up, and things are definitely not what you might expect. It's pretty nuts how good of a job it does in terms of, hey, maybe there's more going on than we think, and I think. Our friends Matt and Mike of Typhon Capital, one of the things they say is that, and anecdotally, I gotta agree with them, is that when the cash to futures spread is too wide, it is typically the futures guys that are right, not the cash index, and volatility is gonna pick up, and that was absolutely the case this last week.
No, they picked up on that. They actually, I was talking to those guys recently. They've been taking a look at the implied vol on VXX and UVXY options as well, and especially on the call, skewing up to the call side. So let's give away everything those guys do. But they've found some things to work with there as well. So
yes, and so here's some other kind of big trades we saw, and what I'm going to do is kind of group everything into one trade. I would say that we saw, generally speaking, outside that big 1x2, prior to this big move, we saw a lot of selling at the 19 and 20 level. I've seen increased demand on out of the money and out of the money puts in VIX. So I've seen bids on the 15 puts, the 16 puts, and kind of the 14 puts, the 14 1x2 in June. And I've seen bids at between 23 and 30, and then lots for sale kind of just out of the money in VIX. And it seems like the VIX back spread is becoming a bigger and bigger and more popular way of hedging off risk.
I mean, most definitely that the back spread and then any type of risk reversal, which has been an interesting evolution to watch over the past couple of years, where you would VIX options are typically expensive for a lot of reasons that we've talked about before, whether it's the being priced off a future that's at a premium or just the implied volatility in the form of VVIX. And when you're supposed to when you think you got to buy an expensive option, you need to think about selling an expensive option. And the risk reversals and also the ratio spreads allow people to do that. And as we didn't get a volatility spike for like 3 or 4 years, you saw more and more firms that want to have long exposure but not pay up too much for it, and who can blame them, taking advantage of things through different types of spreads.
Yeah, the one thing that continues to shock me is the lack of use of weeklies to in weekly options. We'll talk about this during your weekly rundown, which we'll have shortly. The lack of strategic weekly use, I find baffling, as there's really, I can't find a rhyme or reason why we wouldn't have that kind of movement, that kind of use, if you will.
Well, I mean, there is some behavior change that is involved in people doing that, and then I'm looking at the May 25th weeklies. And, some of the spreads are relatively wide, which will scare some people off. Now, if you're looking at the 18 calls or the 19 calls or the 20 calls, it's like a nickel or a dime for each of those. And then if you go, you could buy nobody is expecting anything next week right now. You could buy the May 25th, 22 calls for a nickel right now.
That's just nuts.
Well, there's nothing scheduled, and I need to do a better job of keeping up with the Chinese calendar. But they typically, numbers come out of those guys over the weekends, and if there's, I can almost assume that, and man, when you make an assumption, you can really embarrass yourself. But I could make quite the assumption right now that there is probably nothing anticipated over the weekend out of China when the May 25th 20 strike calls are offered at a dime right now. So, we were talking about, how the guys out in the western suburbs take a look at the difference between the futures and the spot index. Well, if you take a look at what's going on with the out of the money calls right now, there's nothing scheduled next week, and that's not too surprising. You go out just 2 weeks, and you got to go all the way up, and I'm talking about the June 8th options, which are the ones that expire after the next employment number. You actually have to go all the way up to the June 40 to the 40 strike calls to find the nickel offer. So
wow.
It's just, and that's because we've got some known unknowns between now and June 8th expiration.
Yeah, for sure.
So I've never really, I know that's probably the most simplistic, non-quantitative way to be looking at this, but it's what I've got in front of me right now. And it's interesting to me that nobody expects anything over the next couple of days next week as far as a volatility event.
Yeah, and what's odd is how flat that front end of the curve is. So, you mentioned that. I mean, when I'm looking at the June 1, June 8, June 15 spread, all essentially have the exact same futures price. Mm-hmm. You could theoretically, as I look, June 1 it expires before. I think based on what's going on with the Fed, there is going to be serious action around what happens with the Federal Reserve and non-farm payrolls. I think that June 8 future has potential to explode if numbers are odd. But you could buy the June 15 future and sell the June 1 and probably do that for even money or maybe even a credit. And to me, when I see that spread looks like a value as a future spread.
Well, and I know the number's been changing. I didn't have a chance to part of being the corner office guy is you get to do a lot more meetings. And I wanted to check that. I know that the Fed, that when you go to the CME group, there's a spot on their website where it basically tells you the odds of what they're going to do at the next meeting. My understanding is that's been creeping up. And as that creeps up, you would expect that to show up in the VIX curve and in the call premiums for options expiring just after the next Fed meeting.
Yeah.
So, and I wouldn't be, but if that's what we're going to focus on, the other thing is the odds might fluctuate based on major economic numbers, which makes those major economic numbers more risky, which, boom, June 8th. There you go.
There you go.
That's me pulling a little Columbo on that.
All right.
Kids today and their Columbo.
So that's pretty interesting.
And actually what we've just done is we've basically gone through the weekly rundown because all
right, well, let's
been parsing what's going on with those.
All right, well, let's do the official weekly rundown then, and so with that, what is Russell's weekly rundown?
Now, Russell's weekly rundown.
On the weekly side, we kind of segued into it without proper intro music, but then we got the proper intro music. Today, on Friday, again, there's not a lot going on the near term. Looking at the May 25th options, the biggest open interest is the May 15 puts, or the May 25th 15 puts. Which really nobody paid any attention to until last Friday was when we really started to get some activity in there. And I believe it was a seller that came in selling them at around 35, 40 cents or so, anticipating that, at least VIX would remain at somewhat elevated levels. We haven't, and after that trade, we haven't seen a lot of volume whatsoever in the 15 puts. The 16 puts are fairly active as well, and they were traded into about the same day as well. So maybe somebody bought the 16s, sold the 15s, hoping for a little bit of weakness there. But it's as you mentioned, there's not a lot of activity in the weeklies as of late. And part of that is because of we just got through with a standard expiration, but also there's just not a whole lot in the economic calendar between now and now in the next couple of Wednesday expirations. So most of the excess premium seems to be showing up in options. There's not a lot of open interest. Hardly any volume today. It's looking around 70 total contracts. But maybe people are looking at the calls and thinking they're too expensive right now, and they want to wait for a better opportunity to get in if they think the next volatility event is going to be that non-farm payroll number that the ever vigilant and data dependent Fed will probably be looking at very closely when they get it like a day before the rest of us.
Yeah. And looking at the monthlies, June 25s, 26s bought in bulk repeatedly, the 23s as well, and sellers of the 19s and 20s. On Tuesday the 17th, they bought the 25s and 26s, and they bought more. They sold the 2025. They sold the 1924. Just spectacular the way they have really positioned themselves in that respect. And that was Russell's weekly rundown.
Woohoo!
Woo! All right, now Russell, let's take a look around at some of the other things. Now, you are historically a bond guy, right? Prior to your days
Why do
as
you always
Dr.
say that?
Fitz.
That's not
What?
true. I'm not.
I thought you were a credit guy.
I always worked for equity hedge funds. You said that like 3 times when we've done classes together. I don't know where you got that. It's probably because of the sweater vest and the very dullness that is me. But I'm not a bond guy.
I thought in the Grant, weren't you the original Jim Grant?
I was not Jim Grant. Wish I was, but I'm not. No. I don't. But I can speak to fixed income. That's actually what I've kind of spent my morning looking at. So.
Yeah, what do you think about what's going on in fixed income? Why isn't there demand for options in Eurodollar vols not moving that much? The TY VIX not moving that much. What's going on in the credit markets right now?
Well, there's the credit markets. Although the odds of some sort of hike are going up, it's not to the point. It's not to some sort of tipping point where everybody is actually expecting some sort of change in rates. And I think something else that is showing up in the pricing in the bond market is if we get past June, July, then now this in 2008, this sure wasn't true. But I think that there are a lot of market participants that think once we get past the conventions, that the Fed won't do anything until after the election. And I believe that like the November meeting is the week before the election. So I think some of the strangeness that is the quiet, considering all the stuff we got going on in the world, some of the strangeness that is the anticipated quiet in the bond market is if we get past, just the next few weeks and it looks like the Fed's not going to do anything, they're not going to do anything for 6 months.
Oh, that's true.
So I really, I can sit here and do all the quantitative stuff that you want, but I think the more interesting things, especially when people are listening to audio, is not necessarily the statistics behind everything, but the market attitude behind what's going on. And when I'm fortunate that I get to talk to a lot of market participants. That's the OIC last week. And I spent some time with a political strategist I spent time with two of them, actually. One from UCLA and one from Fox News out in San Diego. And, they felt like once we get past the conventions that things are going to settle down a little bit. We're going to end up into a pretty hostile, but kind of a normal election. And normally the Fed tries to be on the sidelines during an election cycle. And we don't have any real indication of inflation. Growth is anemic, but, it's not great, but it's not worrisome. So unless we get some sort of real sea change in one or both of those things, the bond market is acting the way it is because we're going to be on the sidelines and we're going to be watching. Remember Celebrity Deathmatch with Claymation?
Yeah, I do.
Man, they got to bring that out and put Donald and Hillary in Donald and Bernie with one tag team and Hillary and Bill with the other tag team or something like that. Man, that would be great.
That would be hilarious.
But it is going to be pretty ugly in all seriousness. But it's probably going to come down to two people being very ugly toward each other. And the Fed's going to try to stay out of the ugliness.
You would think.
Yeah. No, I think they will. Again,
I mean, didn't they lower rates last cycle and they got a huge brushback on that?
Well, what happened last cycle was I don't believe anything really happened, but I believe the September or October jobs number came in surprisingly strong. Mm-hmm. Which everybody was like, well, that's it. The economy is expanding, so that kind of tipped the election in the direction it did. And the next month that number got revised right back down to a sluggish number.
Right. But the news was that that did not get reported.
It got reported, but
it was October. Yeah, it was November.
Yeah,
it came out like the Friday after. Yeah.
Most people pay attention to the headline numbers. The rest of us pay attention to the revisions and the trends and those sorts of things.
Yeah, and the revisions are the ones that are usually right.
But I think if you're thinking about something that happened with respect to the economic numbers that are Fed related or whatever, I think that might be what your recollection was.
Mm-hmm.
Because I remember that number came out, and I don't know who. Maybe it was
Jack Welch. It was Jack Welch that went nuts.
No. There was somebody that tweeted the second the number came out. Well, that means so that number is going to get Obama elected. And it did. So
there you have it.
For that, I don't have an opinion either way on that. So don't
I don't want to see the nasty tweets where people are saying that I'm leaning one way or another. I am so much Switzerland in this whole thing. It's ridiculous.
Yeah, I'm with you. To me, yeah, I mean, so that's that. And then what do you think about, have you seen anything in oil or gold or any other major vol indexes moving around? The Russell's been nice and frothy.
Mm-hmm. It stayed at a pretty nice premium. Kevin David, right across the hall from me, wrote an interesting blog about Brexit, and then also talked about RVX versus VIX in there earlier this week on the CBOE's blog site, and he noted that it seems like RVX is remaining at somewhat of a premium. There's so many different angles you can come at with that one. But I think one of the best ones I've heard lately is, you think of RUT as domestic and S&P 500 as international. Another thing that you can think of is RUT as growth and S&P 500 as value. And as long as RVX remains at a premium like that, I'm going to keep thinking that the market thinks that growth is at risk.
That is fascinating.
I know.
That is fascinating. So, gold, with this Fed thing, gold got destroyed. I don't know if you saw that. Gold got just absolutely hammered. We saw GVZ, which is the gold vol index, take a nice little dive. How about oil? Oil vol about to break back into the 30s for the first time in I don't know how long. Something we've been talking about, but I'm actually surprised it's taken OIV and OVX this long to threaten. But I think if not today, Monday or Tuesday is going to be the day where oil vol breaks 40 for the first time since November of last year.
Well, it's when oil first started doing what it was doing, a couple of falls ago. If you looked at OVX at the end of each month, and then you looked at the realized vol of oil the following month, even when OVX was like at 40 or 50, the realized vol was coming in at like 60. And I think that the oil traders want to start, or the people that are normally vol sellers wanted to get out of the way and see a couple of months or see a period of time where OVX actually overstates, excuse me, which should be the norm. And we finally it's been 2 or 3 months of, people like us going, well, why hasn't OVX dropped? And because of what's actually going on in the underlying market. Well, I just think it's, the short term looking backward thinking that a lot of traders have, where it takes them a while for the most recent shock or the most recent getting run over to dissipate enough in their memory. And maybe we're starting to reach that point because we haven't had a big jerk around in oil lately. I mean, gee whiz. We got, and I don't know, none of us know exactly what happened quite yet, but somebody blew up a plane.
Yeah.
In the Middle East.
I know.
And oil volatility is going down.
I know. I know.
When you see news items that you think should do one thing and they do something else, that's an easy anecdotal. Maybe oil vol's going to keep moving lower.
Yeah, maybe.
When the political stuff, it should be bullish or bearish for oil or whatever, and oil doesn't react the thing that you the way that you think it should, it's probably time to go the direction that it did go.
All right. Well, Russell, that kind of, I don't have a lot more to cover here. I don't know if you see anything, the ETNs or any other.
We don't have access. Areas. We don't have access to the questions.
Yeah, we don't have the questions.
Longo's got that on his iPhone or whatever.
He's got that on lockdown.
Yeah, unfortunately, we can't do the question portion. So
volatility voicemail.
Yeah. So we'll double down on that next week, and we'll skip the weekly stuff, so I don't have to hear that music.
All right, folks. Then since we can't do the volatility voicemail, we'll move into the crystal ball segment. So this is area where Russell's going to look into the future, and I'm going to piggyback on whatever he says. So, Russell, what do you think's going on next?
You know what? I think 1475 next week. It's like we just mentioned. We're kind of in a lull period, and I'm going to help you with this as well. What comes after next Friday? What's the Monday after next Friday?
The Monday after next Friday is Memorial Day.
Exactly. And those of us that are not, casual VIX observers, those of us that pay a lot of attention to it, know that when we have a 3-day weekend, there is an extra headwind.
Yes.
And so and that extra headwind really does start to kick in about when we will be speaking next Friday. But I'm gonna take that into account and say that VIX will probably be around 14. I'm thinking 1450 to 15. So I'm saying 1475.
All right. Well, and you know what? I'm gonna actually I'm gonna take the under there, and I'm gonna tell you why.
Wow. Okay.
This week was super crazy. I think we're due for a week of relative calm, especially with guys wanting to go away for the week. I think what you're seeing today, and maybe part of the week, was maybe people are saying, I'm taking next week off. And people are definitely going to want to take the 31st and the 1st off. We'll get some trading on the 2nd and 3rd ahead of non-farms. So I think you're going to start seeing vol dumpage on Wednesday, the 25th through the 26th. And we'll actually be hitting lows. And right about now, believe it or not, we'll be recording this show, and the VIX will be under 14, and then it will rally. And then it will rally into the end of the day. And you will be right as of the end of the day, but as of the recording of the show, you will be wrong. So I'm going to say below 14 at 12:30 Central Time next Friday, but maybe 14:50 at 3 p.m. next Friday. What do you think about that, Russell?
I think you're wrong. I think you should just die. You're wrong. You're wrong, Mr. Hat. You're wrong.
All right.
No, we'll see.
And with that, what do we got going on at the CBOE?
Not a whole lot. We're getting ready to ease into the summertime. We've got some institutional classes. We've got a big event with Mark Sebastian. 2 big events with Mark Sebastian. If you're in the Chicago area, this is open to everybody. If you want to come by and see a couple of panel discussions on option usage and volatility, one of the Thompson twins is going to be here. Mike's going to be here, and Mark Sebastian's going to be on my panel, and Mark Short is going to be on my panel.
Nice.
About volatility. I tried to get a good mix of people in there, and you can go to cfachicago.org and sign up for that event. You do not have to be a member. It's sponsored by the OIC and CFA Chicago together. Joe Burgoyne from out on the East Coast has got my favorite option person, Stacy Gilbert, on his panel. And
I like Stacy. She's a smart girl.
BMW and Xerxes from over at MKM. So
awesome. That's great.
So there we go. And then we've got your big class.
Then we're going to be having an option pit CBOE course from July 19th through the 22nd. Start penciling your calendars in now. It's got to be myself, Russell Rhodes. We're going to have Steve Primo, Vince Vora. Keynote speaker is currently penciled in. Or should I wait until we officially? But we've got somebody super, super special that everybody who listens to the show is going to want to listen to for a keynote right now.
I'm pretty excited about that.
On top of the super, I am too. So come out and we be aware and be attentive. We're also going to do a live option block podcast, and maybe we'll even do a live Vol Views podcast at some point too. So be attentive for that. And looking forward to checking that out at Option Pit. Yeah, just read our blog every day, folks. And we'll let Russell go, and I'll let you next week when we'll discuss all things vol on your next episode of Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.